Hi, I'm Steve Dooley, local real estate expert. Scott and I are going to be diving in and to talk about different real estate related topics on both a local and a national level. We'll be coming at you the first and third week of each month.
So, in the next 30 minutes, we're going to do a deep dive, discuss what you need to know about market, seller activity, and the potential foreclosure crisis as resulting from the forbearances.
Excellent. And we'd just like to take a quick moment to thank our partners over at NFM Lending and the Lawton team to help us make this happen.
So, grab a pen, some paper, text a friend, come back, join us, and we're going to dive right in here shortly.
Great. Sounds good.
Excellent. So, hopefully, enough of you have joined. So, Steve, let's just dive right in. It's January, it's 2021, and let's wind the clock back to December of 2019 before this crazy year. Talk to me, where were we?
So back in 2019, well, in December, as far as houses on the market are concerned, there were 3,356 homes for sale in our entire MLS here in Tucson. So that in itself is a fairly low number compared to times past when it was more of a buyer's market. There was 7 to 8 to 10,000 homes for sale. So still a strong seller's market back in 2019. But just to compare and contrast to 2020, in 2020, at this time, there were 2,256 homes for sale in December of 2020. So that's down almost another 1,000.
Yeah.
Even a stronger seller's market.
And we're seeing that nationwide. So as recently as a week ago, they did a national look at from NAR, and there were less than 400,000 single-family homes available coast to coast. Now, in a good market, we're looking at about 750,000. So we're seeing this happen nationwide. There is an inventory crunch. And so, Steve, how many homes are in the market right now?
Right now, as of December, there are 2,256. Sorry.
Oh, okay. Yeah, that's correct. Because that's looking at the notes. So how many single family home transactions did we have in 2019?
2019 number of transactions in 2019 was 16,337.
Okay.
And in 2020, end of year, we were looking at 16,980. So actually more transactions, more houses sold in 2020, even through COVID, more houses sold in 2019.
How is that possible?
It's crazy because the inventory actually is 32% less than it was, yet we sold more homes.
Interesting. So homes obviously just stayed on the market significantly less time.
Yeah.
What's it like right now, January, making offers?
So January 2020, making offers is competitive. I won't sugarcoat it for anybody. It's great for sellers because you're looking at getting multiple offers on your home, even if it's in moderately good shape, not in pristine shape. You're still going to get the offers. Now, if you don't do any updates or fix ups or anything like that, you may be sitting on the market for a month, which, to put it in realistic terms and relevant terms, that's not very long at all. If your house is really done up and properly ready to sell, you can expect multiple offers within a few days.
Yeah. And are you seeing a lot of homeowners just looking at the equity that they have and kind of cashing out?
Yeah, a lot of them, especially a lot of investors. People are selling off rental properties. I do see that. And as far as people with equity, a lot of the homeowners out there are not only selling their homes, but they're also refinancing as well. So refinancing due to the low interest rates, super huge right now, which kind of brings me, do you want me to touch on buyers?
Yeah, that was going to be my next thing, because if we're in such a seller's market, then how come the buyers are so active?
Right, that's a great question. So here's the thing: the interest rates are still super low, and in the mid twos, 2.5% around there. If you have decent credit. So what that means is you're getting a whole bunch of influx of new people looking to buy homes, especially a lot of first-time buyers who may or may not have qualified before, but to make the monthly payments due to their income. But now, since the interest rates are so low, they can afford those payments, and it's making it look a lot more appealing to them to own a house rather than rent.
Makes sense. Anecdotally, give me a story from the last 10 days about one or two of the offers that you've written.
There's been a few.
There's been a few. You've written a lot of offers the last couple of weeks?
I have like 6 or 7.
That's fantastic.
With different
Okay.
clients. Yeah.
Yeah.
Yeah. It's been busy.
Yeah.
So that just speaks to the market. I mean, the market it's a seller's market, but it's moving fast on both sides. So homes are being sold quickly, but new homes are coming. So this is for buyers. Rest assured, you can still get a house. We just have to be on the spot and on point. You have to be prepared with a pre-qualification letter and everything else before you go look, because you're going to have to go out there, find the house, place the offer that day, because within 2 days it's gone.
And just to slide it in there, nobody pre-qualifies faster than NFM lending. So, because we want that sponsorship. But in all seriousness, are you going way over list price in your offers? Your specific experience with your clients. I mean, obviously, if you're writing that many offers, you've got clients, you're successful. What do those actual offers look like?
Great. That's perfect. So, like I was saying, I put in a couple offers with different clients, and I actually just got one under contract. We put in an offer 10 under, and we ended up getting the house for 5 under list price. That being said, that home was on the market for about 30 some days, which knowing the market the way I do, that tells me that, that's a long time for our market. So we went ahead and we went aggressive on it. We went lower and we ended up getting it. We got a counter and we got it for 5 under. At the same time, with other clients, some houses are very popular. I've put in 5 to 6 offers, and I had one in December that we ended up getting the offer at $20,000 over asking price. That's not uncommon. So I guess the biggest thing, for our buyers is to make sure you're connected with a real estate agent who knows their business, knows the market, and knows the situation. Because based on days on market, condition of the house, and different other factors, just because we're in a high seller's market doesn't mean we automatically have to put in a high offer price.
Yeah.
Does that make sense?
Yeah. Sometimes winning the bid isn't winning.
Right.
Yeah.
Yeah. Because we want to find people the right house at the right price.
Exactly. That's fantastic. What a sense of confidence it is for you to have these clients getting in at realistic prices with the responsible financing. I don't think I've ever been alive where there's 2% financing.
I know. I think it's all time actually in the history of financing.
We should be so lucky,
right? All
time
time ever lows.
Perfect. Well, hey, kind of jumping down, talk to me about how COVID has affected the sales process.
Okay.
I know that was kind of one of the other questions that we had that somebody had asked, not necessarily one of the questions we talked about before this, but as a seller, how can I feel comfortable having strangers in the house?
That's a great question. So COVID has definitely been an industry changer for real estate, as it has been for almost every other industry around. Everybody's been affected by it, right? We were shut down for a while. No open houses, no showings, no nothing for a while, but then we reopened here in Arizona fairly quickly compared to everybody else. For sellers, so if you're looking at selling your home and you are concerned about COVID, the spread of COVID, and people coming into your home, there's different things that we can do for you. One, we can obviously not allow any showings without a certain appointment, to limit the number of people that come. We also will provide, hand sanitizer, booties, gloves, masks, and everything else. And one of the rules within the real estate industry here in our MLS is that we are to abide by all COVID, standard precautions. Wear the mask wherever you go at a minimum. But having the booties and gloves in your home, offering that to people who come in, that's part of it. Limiting the number of people who are allowed in your home.
So if I'm the buyer and there's 2 of us on the loan, so it's the 2 of us, and then I can't bring in all the extra family anymore?
Probably not.
No?
But we can. So that's another side on the buying part of it too, and for the selling. So what we've done is we moved to a lot of virtual stuff. just like everyone else. So
talk to me about that.
Yeah, on the selling side and the buying side, one of the main things we do for clients is we can offer a virtual open house where me as the listing agent would just come over to your home at your convenience. We schedule the time. We have it set up as a time, and we'll promote that online, through advertising and everything else to get people to come. And then we'll do a virtual video, open house tour of the property live with people on there, via Zoom or via one of these other, channels, and Facebook Live, things like that. We connect to all those. But we'll get it done, and you can answer people's questions live in real time. And just do the open house without having people in your house.
Of course.
So limiting that exposure on the selling side.
Yeah.
On the buying side, with buyers, I do a lot of virtual tours with them, where that also helps the sellers because we're not bringing more people than necessary into the home. It's just me in the home, either on, like, we do FaceTime or I'll shoot a video and upload it to my channel and send my clients the channel or the video to get them to see the house.
Fantastic. Random question. Do you use a stabilizer, or do you just hold your phone really still?
No, I use a stabilizer.
Fantastic.
It just makes it smoother, and
so you don't have to worry about getting seasick. That's the reason why I asked that question, right? So it's not going to be
fair question.
If he trips, you're never going to even notice it. Well, diving in, so talk to me about the appreciation, specifically here in Tucson. What did 2020 bring us on that? Did we go up? Did we go down?
Yeah, and you would think, and maybe the media and popular belief is that COVID impacted real estate in a negative way, when in reality that's the opposite has been true. So just to give you a couple numbers, 2019. So as far as home prices and home, appreciation, in 2019, home values went up 8.9%, which is a lot. Historically, if you take historically, it's usually 5 or 6%. You can expect your house to go up per year on average. So it was 8.9% in 2019.
Okay.
In 2020, through COVID, home prices in our MLS went up 10%. So if you had bought a home at the beginning of 2020 and you held on to it for 1 year, you would have had a 10% return on your investment, which is really unheard of in real estate.
That's fantastic.
Yeah.
Now that's really fantastic, right? Because
good,
that means there's a lot of homes here. Do you foresee the same amount of transactions in 2020? I mean, I know you don't have a crystal ball, right? Somebody does somewhere, but not us.
George Soros?
Yeah, Soros. Soros has got it. So do you foresee, in your opinion, as an experienced and successful agent, what does 2021 look like? 2021,
I mean, it's going to be more of the same. The seller's market is expected to continue. Inventory is dropping still. So, buying houses is still going to be viable. It's just going to be competitive like it has been in 2020. Interest rates, they're saying it's supposed to maybe go up a little bit by end of year, but they're talking like up to 3 over the course of the year. So, I mean, we're still in the 2s, and even at 3%, that's still really good.
Excellent.
We might get a little bit more inventory coming in like second half of the year, but even then it probably won't put us back to even where we were in 2019.
Okay. Yeah, there seems to be a lot of buyers, not a lot of listings, but you seem to find the right ones for your clients, which is fantastic.
Yep. Sometimes it just takes some digging. We look for off-market properties for sale by owners, so we uncover every rock for our clients to find them the right house. Yep.
Excellent. Trying to see if had anything else that I wanted to make sure. What has the election, or how has, let me phrase that question, how has the election impacted the market?
Well, you want the short answer or the long answer?
Probably both. We're going for time.
Okay. So short answer, it didn't affect it at all.
I believe that. Okay.
And here's why. So, historically, throughout every election, throughout history, the housing market has really not been affected by elections. I mean, of course, the media and everything would like you to believe that it has. This is just not the case. So what it does do is historically, during the election week, you will see the demand for houses, like the number of showings and the number of people wanting to like buy a house drop.
Mm-hmm.
Usually for 1 to 2 weeks, like during the election and then post election. And funny thing about all the stuff going on in 2020 is with all of the chaos that was going on during this election, um, per showing time, which is showing time. Sorry, I digress. But showing time is a website where we get data that tells us the number of showings. So it tells us it's a firm grip and a pull on the pulse of the demand of buyers out there. So it has like real time every week stats
Mm-hmm.
on how many people are buying homes. But per showing time during the election, those 2 weeks, we actually were up 5% from the number of showings at the same time in the previous election.
Interesting. That's fantastic. Do you think that that was nationwide? And this is a total opinion, right? Do you
Yeah.
think that was nationwide? I mean, I would lend to believe that it has to be just because, there was certainly an exodus of people from stacked housing, multifamily housing, high rises to, four levels, 2 levels or less, mostly because people needed to get outside and,
Yeah.
high density areas.
Well, the
um,
COVID too, right?
yeah, because of COVID, people were getting a little itchy being inside. And so they really just kind of needed to get out. We saw that happen in Boston. We saw it happen in Manhattan. We saw it happen in San Francisco. And, like you said earlier, the media loves to put a negative spin on it because that's people doom scroll, they read. And,
Yep.
but, Manhattan's already started to come back. And San Francisco had such a backlog of people who were looking for housing and such a significant amount of discretionary income. They still bought, they just didn't move in. They took advantage of the market. I'm fortunate to be a coach and have clients over in that area, and they had their best year ever with fewer homes, but with fewer homes hitting the market in a 3-month period in the second quarter, but the other 3 quarters more than made up for the rest of the year.
Yeah. And I feel that what's happening in Tucson is also happening nationally.
Mm-hmm.
I do know there's part of the reason for our housing increase that's been so dramatic is because of what you just said.
Mm-hmm.
People are massively leaving places like California, Washington State, and then even back east to come out.
Yeah.
Due to the COVID and political stuff and just whatever the situation. But lots of people are coming over.
Yeah. Well, it's fortunate that we're here in Arizona because people from the East Coast go to Florida. People from the West Coast come to Arizona.
Right.
Which is just fine.
Yeah. And now you're seeing them go to Texas as well, right?
Yeah. Texas is going to
other
get tired
states.
of that, though.
Yeah.
I know a lot of Texans, and none of them are excited at this point.
Yeah.
Yeah. They can't afford houses in their own state. They're not going to be happy.
Right.
Any other questions you wanted to make sure we touch base on?
So there is one question that I know that people are wondering about, and I actually have a client who's debating on selling his home, and here's why. Let me just ask the question.
Mm-hmm.
But we always hear from the public about foreclosures. Is there a real story there? What's the deal with the foreclosures and the forbearances?
Well, let me take the second part first, right?
Okay.
So forbearances are when a home borrower and their lender, Bank of America, well, I guess couldn't say Countrywide anymore because that's not to be found, but Wells Fargo, their bank or their servicer, and they both agree to extend the terms. And what that looks like is they could take 90 days worth of payments, 3 months, and tack it on to the end of the mortgage. They could take 90 days and no payments, but then all due at the end of that 90 days. There's a lot of different workouts. And, forbearances are a great tool, a great lever that both state and federal governments are encouraging between homeowners and their lenders. And the reason is because they're doing everything they can do to avoid another 2008 housing crisis. So the 2008 housing crisis triggered the financial crisis, and they went hand in hand. And they happened because of the following reasons. They happened because homeowners, when they had the 10% annual increase and people were paying $20,000 over list price in 2005, 2006, and into 2007, there was this huge run up. What they did is they used irresponsible financing, short term, 3 years, you'll refi it, and then the house will appreciate. And what the lenders did this time is they immediately dropped interest rates, but then the lenders themselves all changed their policies on how they would loan money in the second quarter. So when we saw, 10% of this country refinance their house in April, May, what happened was in 2007 and 2006, when they would do that, they would pull the equity out and they would go up to a 90%. So if they owed 60%, they leverage up 90, they take the 30 out, and then instead of doing anything smart with it, they bought boats, they bought another house and over leveraged that. And it became this domino effect of no equity. In 2020, the lenders got real strong and real firm on their lending policies. And so they did not allow that product to happen. So people couldn't pull the equity out, which is the reason
so they
why.
learned from their mistakes.
They did learn from mistakes because it frankly wasn't profitable for them. Right. The only company that made money on the financial crisis, I think, was Goldman Sachs, and they make money no matter what.
Yeah.
And so, but the rest of the banks don't want to go through that cycle again. They don't need additional legislation. For better or worse, the administration was on top of it and got out of their way, and Americans took advantage of refinancing. And so what happened quickly then is when you refinance, you have 45 days of no payment. When you do get your payment back, it's $200 or $300 less than what you had. So immediately you're starting to save money. Now, a significant number of Americans took the advantage of the forbearances. And so all of a sudden now they're sitting on 4 months worth of mortgage payments that they didn't make. And so that put some cash in their pocket. And it also gave them that sense of security. And so will we have another foreclosure crisis? We will not have a foreclosure crisis as a result of homeowners over leveraging their homes. We could have a financial crisis, which would trigger a housing crisis if nobody's working. But frankly, right now, there's such a backlog of home buyers that are ready to go that it would have to be a catastrophic event. And that would be something that would affect everybody. And the last thing anybody's worrying about is foreclosures. And so waiting on that is a long wait because it's not going to happen anytime soon.
Quick question. Let's try and give that some perspective. So since we mentioned some numbers that we're in like a super seller's market right now. We have like 2,000 and some homes on the market available, right?
Yep.
Which is down. And let's just say that we had a 10% foreclosure rate in our MLS here. Let's just talk local because I know the numbers. So that would maybe put in another 1,000 homes. Let's just highball it, say 1,000 extra homes in foreclosures hit the market, right? We have plenty of buyers to absorb that, right?
Absolutely. So the absorption rate, even if we did have foreclosures. Now, here's the best part, and I can predict the future on this. You will absolutely see in the headlines over the next 6 months, 100% increase in foreclosures in Maricopa County.
Right.
50% increase.
It's all over the news.
It's going to be all over the news. And then when they look at the numbers, Maricopa County went from 80 foreclosures to 160 foreclosures.
Over 100%.
Yeah. In a healthy market, that should have 200 foreclosures because, there is a natural order to the economics, right? People lose their jobs. People have life changes about every 6 months, and how they handle those depends on whether or not they're keeping their house. Yeah. Now, in 2006, 7, 8, that kept triggering all the way through, what people did then is they walked from their extra house, they walked from their rental, and then eventually they walked from their house, but they kept their cars. It was the most random thing in the world. If you look at the auto industry, you'll notice that they've had quite a few increases in the number of cars that have been returned to them. People aren't going to lose their houses again. People are going to fight for those houses. Yeah. So, please comment in 6 months, come back to this video and let me know that you just saw the 100% increase in whatever county you're in.
Yeah, it's on YouTube already.
Yeah, it's the question behind the question. Does that mean you went from 6 foreclosures in your county to 12 when a normal market should have been 25? Right. And so that's just part of the cycle.
Yeah, I totally asked that question on purpose just to address some of the stuff that's out there on YouTube and the media right now, with all that's saying that the housing market is going to crash in 2021 and there's going to be, like you said, 100% foreclosure increase. 100% is a relative number.
Yeah.
That was the whole point of this.
It's always the question behind the question.
Well
Thank
said.
you. Thank
Yeah.
you. I don't have any other questions. I wanted to make sure. Did you want to follow up with anything else?
No, I think that probably sums it up for today, Scott.
Excellent.
Yeah.
Hey everyone, thank you so very much for joining us. Like I said, we'll be here the first and third week of every month, and be looking for it. We'll certainly send out the alerts. Have a wonderful day.
Looking forward to talking with you some more. Bye.
Thank you.